We really wanted to work with A16Z and first round at the same time. And the thinking behind it was, by the way, I recommend this to any founder who can pull this off. I think A16Z is a great multi-stage fund, and they'll be helpful in all stages throughout the company's journey. And first round is amazing when it comes to early stage company building. And we were able to get both of them, and we really liked the partners that we were working with. So once we got both of them, they both have their own ownership targets. They're both pushing for as high ownership as possible. That ends up with a round structure where there is very little space for a third, fourth, fifth fund to come in. So that's why after those bigger funds coming in, I think the space left, and wasn't happy with it. But then we stretched a little bit, and I'm sure we found a good middle ground. At least that's what I thought. But
Enis is the best text harasser. So Enis, maybe you'll spend just a second here telling me what's the playbook for trying to get someone like Gorkem to then let you come in and maybe prevent him or get him to retain.
I made him feel bad. No, I made him feel bad about this so that he gave us more and more allocation in the future rounds. It's the feel bad effect. I think the problem for us has been in their pre-seed round, which was largely angels and individuals. It's Europe, and the problem is Europe. So because we're a Dutch fund, we need more than 5% ownership to not pay corporate income tax in the Netherlands. That puts a threshold to any pre-seed investment. So even if the company is raising a couple $100,000, you need that 5%. Otherwise, there are tax implications. You have to explain it to your investors. That also impacts your follow-on funding to that company, because then your tax liability just continues to increase. And even if fund managers are okay paying tax, the fund investors are not okay paying tax. I mean, almost all the Dutch funds have it, especially if you're a BV or a co-op structure. And that puts a certain minimum threshold as to how much you have to invest in a company. And while Gorkem was doing the pre-seed angel round, they said, hey, no, we're not going to get anyone more than 250K allocation. So I was having this conversation. I was like, hey, but this and this and this, so we need more allocation. We need that 5%. And they're like, no, we don't want anyone to have high ownership. It has to be maximum 250K. We're not going to go beyond 250K. And I think that created a mental burden on us.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with ACE Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to the European VC podcast. Today, I have my dear friend Enis Hulli with me from E2VC, formerly the 500 arm in Europe, which he finally broke out of.
You don't even remember the name, man. You don't even remember the name of the previous fund, which is good. I like it. I like it.
Emerging Europe, of course I do. Enis has been a longtime friend, and you'll notice that he's a big bullshitter if you haven't yet and don't know him already. Enis, tell us a little bit about why you said, when I said I want to bring on a super crazy founder, you said, let's talk to Gorkem.
Am I the crazy one?
Yes,
the crazy one.
First of the batch.
It's not Gorkem was crazy. I think it's the company, because I've been hearing about these growth stories ever since I started Ventures, say 10 years ago. I've been hearing these growth stories stay from companies like UiPath, for example, which went to nothing to 100 million ARR in a few years, or Diaspora AI or 11 Labs, but I've never actually witnessed one. I mean, we have 3 unicorns in our portfolio, amazing companies, but their growth has been rather linear compared to Fal. And then what Fal experienced over the past 1 year has just been stunning, and want to dig deeper with Gorkem.
Beautiful.
Yeah, thank you.
And with those words, Gorkem, maybe you will say a little bit about yourself and Faleye, just to get everyone up to speed.
I'm the CTO and founder of Fal. and we are a generative media platform for developers. It's a funny term how we describe our company. I don't think anyone else uses exactly this terminology, which I think is one of the things that sets Fal unique. So when we say generative media, we talk about image, video, and audio mediums. So I know LLMs is what everyone cares about, but there's a huge revolution happening on the image, video, and audio side as well. And so we collected all these three mediums and called it media, and then generative media because it's AI generated. So we are a platform that hosts open source models. We have our own inference engine, so we host these models as fast as possible and more reliable and performant than our competitors. But also in the past 6 months or so, we are also hosting more of the inference behind the scenes of certain research labs. So our inference engine is a powerful tool that we can use to host open source models or some closed source models as well. And then we have a model marketplace that's powered by this inference engine. So developers can sign up and start using any of our models and build products on it.
Enis, can you help me understand? Because I am just a guy that invests in venture firms and sees the overall trends and then kind of doesn't try and comment too much on the individual companies and the underlying technology. But I think, Gorkem, here you said a bunch of things that need to be said in the context of the AI value chain, so to say, because we have the AI stack or whatever we want to call it. And then it's maybe if you would, because the majority of the audience, of course, are VCs and LPs. So if you take on that hat and say, how should a VC or an LP that's not super native to AI understand what Gorkem just said?
First of all, I don't understand it either. I think our thesis is to invest in shit that we don't understand. We spend a lot of hours trying to understand different companies' business models and technologies. And if we understand it too well, that means anyone can understand it. So it's not that interesting. But when Gorkem described to us what they're doing on the GPU layer, inference layer, their utilization, latency, etc., it was something that we couldn't quite grasp, but the results were there and they're here today as well. So long story short, I can't explain. But I can explain it to you from a business model standpoint. Obviously, they host all these models on audio, video, and image, and the way they've actually cracked the technology, which I hope Gorkem can also dig into, is they have much better utilization, much lower latency, which enables for them to have much higher performance throughput, have more models, and have more customers on the same set of GPUs with even better margins and reduced price point.
On the one end of the stack, you have NVIDIA doing all the hardware and those guys, and the likes of NVIDIA. Then you have the foundational models. We're on a European podcast, so I'll say the Mistrals of this world.
Yeah, and BFL, Black Forest Labs, also based in Europe, in Germany.
And Black Forest Labs, and then a couple of players we all don't know the names of. And then we're getting into the application layer as well. Are you on the application layer? Is that the way to understand?
We sit in between the research labs and the application layer. So because we are a platform for developers, whoever is building applications using any of these models, use it through us to build their production ready web scale AI applications. So these could be, like, we are seeing a lot of traction from visual ad content. So there's a lot of these like application layer companies now creating advertisements for products, for podcasts, for whatever you are creating ads for. So there's a whole range of companies that are using Fal to create those ads. We are seeing a lot of traction from voice agents. So people building voice agents for customer support applications, for DoorDashes and Ubers of the world, like people are building that.
Is it correct to say that you are on the same layer, so to say, as ChatGPT, but ChatGPT just utilizes OpenAI's model? But you're basically on the same. So you're developing a product on the same layer as ChatGPT. ChatGPT is then text a bit of voice, and a bit of pictures.
Better comparison would be like the OpenAI's developer APIs. You can build on top of OpenAI using their APIs. So a better comparison would be that layer, but for different type of models.
A lot of our portfolio companies use Fal. I think we have 15 AI companies in our portfolio, out of which probably 12 of them are Gen AI, and I would say 5-6 of them are Fal customers. For example, one of our portfolio companies, Brainbase, they do a lot of automation using Gen AI, especially for customer support, sales, etc. And unconsciously, they didn't even know that Fal was in our portfolio. They built their whole stack on top of Fal.
Tell me a bit about, from both of you, the opportunity space on this part of the stack, so to say, because, and I'm just trying to abstract things before we go a bit more into your journey and everything, Gorkem. But it's just because you always have this discussion in venture: where do you invest in the stack? Where are the biggest opportunities? Seems that most have come to the conclusion you don't want to be on the infrastructure layer, but some also say you don't want to be on the wrapper layer. Others are now saying, well, clearly you do want to be on the wrapper layer. And then there's this AI or API layer, or whatever that layer is called, correct? If you have that nomenclature, please tell me. And why is it interesting to build in this layer, both Gorkem, the opportunity you've seen, and then maybe Enis, you can talk about the layer more broadly.
Yeah, first of all, no one knows. VCs are just like talking just to talk. Like, oh, is it going to be application layer? Is it going to be infra layer? Like, everyone's just pretending.
Management fees are for talking. We get paid to talk. It's 2% per year to talk.
We are extremely interested having developers as our audience, because we believe it gives us a lot of leverage. So like, we build something and then like millions of developers build things on top of it. And then that creates incredible leverage. Like if you look at like huge companies today, both Databricks to Snowflakes, Stripe, they're all like developer centric platforms. So there is always, whenever a trend like this happens, there's always a developer platform that grows a lot with all the applications being built on top of it. So I totally believe there's going to be some value at the layer we are in. I'm sure there's going to be great application layer companies too. And I'm sure like there's going to be great infra layer companies too. I think all layers that are going to be winners. I think people are just, trying to think too hard when they're like picking layers to win. No, I think there's going to be winners in all the layers, and hopefully on the developer tools layer, infra layer, it's going to be us.
And like, I think from a VC standpoint, if you believe that the number of models is ever increasing and the infra layer is also going to get more fragmented, then that abstraction layer that Fal provides makes a lot of sense. And the fact that the moment you're a business to developer platform, which Fal is, you have to be horizontal. You don't know what the actual use case is. People are using, period. What they're using for is a different question, wherever the adoption comes from. There are more people building on top of Fal, and with AI, adoption is coming in terms of waves. Like there are multiple waves happening at the same time from different industries or use cases. And the more horizontal or business to develop your position, the more you can leverage those waves consecutively or a longer time horizon.
Yes, I was about to say. Okay, so that was Enis just talking for the management fee.
Yes, this is me fundraising.
Yes, thank you. And you do it beautifully always, Enis. Now, with this kind of context set and the broader conversation around the market and so on, let's return back to Gorkem and Faleye, and maybe start describing it first and foremost from the venture perspective. How did Faleye end up in E2VC's hands?
It didn't. I wish it did.
Enis, why don't you tell the story?
Yeah, I mean, we're good friends for the past 2 decades. Elementary school, high school, tennis. He always beated me at tennis. He was he was like top 3 in Turkey all the time. I was more the tourist tennis player. I would go to play tennis. I would lose my first or at best second game, and then I'll just chill with other tennis players. It was my, elementary school and high school tennis career. We also did MUN together. So we've been close friends. In fact, when I joined the VC world back in 2016, I was spending time at Gorkem's house in San Francisco. That's how we invested into a bunch of companies in the Bay Area, including Carbon House, billion to one, which are now unicorns. So Gorkem was also my relay into the venture world, especially in the Bay Area. And when he was joining Fal, it was already too late. I did my best to invest, and then did my best to invest more and more at every single round. But the company did so well that never had the window to invest as much as I wanted to.
And Gorkem, what makes a childhood friend refuse another childhood friend?
No, like he ended up he ended up investing in the company actually. But yeah, I think maybe there was an opportunity in the very beginning that like it was quickly. We did that very quick pre-seed round, and then Enis invested in our seed round. So I think he ended up investing. Maybe the amount could have been higher, but we had a oversubscribed round on our seed round, so we did our best.
Gorkem, we speak very closely on this podcast, and I think Enis is also a very open book. The page is almost flying out of it before you've opened it. So let's unpack the dynamics here, and I think it's super important because I try and make everyone who listens to the podcast that might not be super, let's call it, knee deep in the most coveted circles, understand what venture is like in those. And obviously, when you did your pre-seed round and then continued on to more and more success, you were a quite coveted founding team, and you were building something that there was hype around. So I do really want to invite you to to speak bluntly. Why did you look at E2VC, as their name wasn't at the time, and say, well, I can only give you this much, or in the first round, I actually would prefer to go with locals, or whatever was your rationales?
Yeah, I mean, in the seed round, like
I'm loving this. I'm loving this, by the way. I'm enjoying
this. Is good conversation. I like it too. The way it usually happens is, so we did our actually like two big firms on our seed round. We really wanted to work with A16Z and first round at the same time. And the thinking behind it was, by the way, I recommend this to any founder who can like pull this off. I think A16Z is a great multi-stage fund, and they'll be helpful in all stages throughout the company's journey. And first round is amazing when it comes to like early stage company building. And we were able to get both of them, and we really like the partners that we were working with. So once we got both of them, they both have their own ownership targets. They're both like pushing for as high ownership as possible. That ends up with a round structure where there is like very little space for a third, fourth, fifth fund to come in. So that's why after those bigger funds coming in, I think the space left, and it wasn't happy with it. But then like we stretched a little bit, and I'm sure we found a good middle ground. At least that's what I thought. But
Enis is the best text harasser. So Enis, maybe you'll spend just a second here telling me what's the playbook for trying to get someone like Gorkem to then let you come in and maybe prevent him or get him to retain
I made him feel bad.
Ownership for you?
No, I made him feel bad about this so that he gave us more and more allocation in the future rounds. It's the feel bad effect. I think the problem for us has been in the pre-seed round, which was largely angels and individuals. It's Europe, man. The problem is Europe. So because we're a Dutch fund, we need more than 5% ownership to not pay corporate income tax in the Netherlands. That puts a threshold to any pre-seed investment. So even if the company is raising a couple $100,000, you need that 5%. Otherwise, there are tax implications. You have to explain it to your investors. That also impacts your follow-on funding to that company, because then your tax liability just continues to increase. And even if fund managers are okay paying tax, the fund investors are not okay paying tax.
Is that only on the first investment, and then you can get diluted later and have less than 5%?
As long as you have more than 5%, you don't pay corporate income tax. If you go below 5%, then there's a remedy period where you still don't pay tax. If you're post that remedy period, you haven't actually fixed the issue, then the capital gains that you made until you were 5% is still no tax. But the capital gains that you made post dilution, you start there's basically tax accrued there. And it's a Dutch thing. A lot of the Dutch funds, I mean, almost all the Dutch funds have it, especially if you're a BV or a co-op structure. And that puts a certain minimum threshold as to how much you have to invest in a company. And while Gorkem was doing the pre-seed angel round, they said, hey, no, we're not going to get anyone more than 250K allocation. So I was having this conversation. I was like, hey, but like this and this and this, so we need more allocation. We need that 5%. And they're like, no, we don't want anyone to have high ownership. It has to be maximum 250K. We're not going to go beyond 250K. And I think that created a mental burden on us.
Okay, here comes then the seed round. You were let in to the seed round. Gorkem, why did you let E2VC in here? And then we'll go Enis afterwards.
I mean, there are many reasons. First of all, Enis is a great partner, GP. So, wanted to work closer with him. Per dollar invested is for sure been the most useful investor in the company. So
we invested so little that it's easy to beat you.
And then like Enis is, they're based in London and Turkey, and Eastern Europe connection was important to us. We do have some engineers in Turkey. We wanted to grow our team there. Like our company is based in San Francisco, but like we wanted to grow an engineering team in Turkey potentially. So we thought like Enis could be helpful with that. And then it turned out a lot of our like customer base is also like Eastern Europe and then some in Turkey too. So even for customer intros, things like that, it actually helped to work with Enis because like a lot of app studios in Turkey, Ukraine, in Eastern Europe in general use Fal. So it was really good working with Enis.
And that is all thanks to Enis, I'm absolutely sure.
Is this like advertisement break? Is this like an infomercial, me fundraising? I'll just open the pitch deck now.
And then tell me, in the seed round, I imagine you did not get your 5% either.
No, of course not.
So you threw out the whole tax issue?
Yes, it was. I mean, I think that it was a mental bottleneck. I threw it all together. It wasn't just for fun. I was like, you know what, 5%, Europe, this tax thingy, whatever, no, who cares? By the way, Netherlands also changed its laws now. Ever since January, you don't have to have 5% anymore if you're a CD structure. So that applied to our funds. I mean, that applied to many funds. A lot of funds paid a lot of tax, but hopefully not anymore.
And now let's just fast forward a bit to your latest round, which is going to be announced tomorrow. So by the time this goes out, I promise you it will be it will be past tense. So tell us a bit about putting together this round, who invested, was Enis in it, why was Enis not in it, that type of thing.
So this is going to be our Series B. We are raising, I think, ended up being $49 million in this round. So it's a pretty big round. Notable NA16Z is leading with participation with all our previous investors. Yeah, it came together quite quickly, actually. We were preempted by an existing investor, and that kind of built up momentum, and we were able to get it done pretty quickly. But yeah, it was actually like even easier than our A round. It's usually supposedly gets harder, but like we had very, very good metrics going into the Series B round, so it actually ended up easier.
Can we hone in on that? Can we hone in on the metrics? Because I mean, I know your metrics. Obviously, I don't know how much you want to disclose, but this past 1 year, when I plot quarter over quarter or month over month, there's been a big inflection post summer, and that inflection got you to whatever the number I don't want to disclose, millions in ARR. But perhaps you can you tell us a bit about that?
When we did our Series A, we had single-digit revenue, growing slowly, I would say. It wasn't like growing very fast, but then the market kind of helped us because a lot of new models were released over the summer, and we were in a very good position to host these models, and it was like a step function of quality change, and then these models all of a sudden became more useful to bigger companies, more use cases opened up, a number of enterprises who are using these models increased, and then we were able to be there at the right time to actually facilitate the usage of these models. So starting from June, July, our revenue started increasing a lot more. And I think over this year, we almost 20x, 22x our revenue, which is quite a lot.
And like these macro dynamics, a lot of models, better quality, a lot of adoption coming from different industries. Those are all macro dynamics where you were good position, but so was a number of other players who even raised more than you guys did, past tense, excluding this current round. But I felt like you grabbed the largest piece of the pie. Is that fair to say?
Yeah, I think so. And I think one thing that helped is our market positioning. So when we were raising our Series A, that's exactly when we decided, okay, we are just going to focus on image, video, and audio models. And we got some raised eyebrows because people thought, okay, LLMs are much bigger market. There's a lot of inference players already that are doing LLMs, but they're also hosting image models. And they thought the market is so crowded, like, how are you going to differentiate? This is all going down to zero. This is a price war. Everyone's gonna reduce their prices. But then, and when we focused on just this like supposedly smaller part of the market on image, video, and audio, we were actually first able to differentiate ourselves with our technology because it's a smaller subset of models that we focused on optimizing and improving. That worked very well. Also, it was incredible for market positioning. When we said, okay, this is only what we are doing and we are like the best at it, and we weren't scared of screaming this, people believe you. And everyone else, all our competitors, they're trying to do like everything basically, mostly focusing on LLMs. So the message they're trying to tell their customers gets diluted. And one other insight we had was, okay, these models are actually going to be technologically different, right? Like we actually have to focus on running like these type of models compared to LLMs and actually be better at that than compared to our competitors. And that turned out to be true. It wasn't like very clear, I would say, in the beginning, but like as bigger image models were released over the year, it became more clear, and we were ranking number one in all the benchmarks, and that also helped us a lot. And one other thing that was maybe obvious, but we actually saw this play out is the type of customer and buyer that buys image and video models versus LLMs. Maybe you are selling LLMs to code editors, or I don't know, like enterprise search companies, things like that. And we are selling image and video models to like a completely different buyer. So there were signs that these two markets were going to be like completely different. But I think we were the first ones to identify that and actually double down on it. And, that helped us differentiate ourselves and create that value that Enis was talking about over the summer.
Mm-hmm. And then like post-summer, have you seen your competitors jump onto media as well, jump onto do better and image models, and build a separate team just for that, for example?
A little bit. Still, I think luckily for us, LLM market is also growing, right? With recent like DeepSeek and Mistral open source models, like there is enough things to do over there as well. So they are still focusing on that. And, we see like Together and Fireworks, they have some image models, but no one is owning the space as much as we are. And I think it's really important. Hopefully they don't listen to this and change their mind, but
yeah. And it's crazy because you guys got to this dozens of millions in annual recurring revenue with only 18 engineers. It's not that 18 engineers is less, it's more so that you didn't have a single salesperson, and it was founder-led sales where both of the founders were also technical. What were the pros and cons of that?
I mean, it is really good learning experience for us too. We just didn't know how to do sales at all. We kind of had to learn it on the fly, but it was, one of the most rewarding periods of my career because, I'm doing something completely different, but also like the results were good because we were able to actually sell this and get a lot of enterprises onboarded. We did have a sales advisor that actually helped us a lot. And I recommend like all technical founders to like work with a sales advisor. And there's just little tricks that people learn over the years that if you are not a salesperson yourself in a big company that you never learn. And these things actually helped a lot in the beginning. He helped us set up our order forms. He helped us set up our pricing, how to do yearly commitments, all those things. He was really helpful, but at the end, we were the ones actually going to calls and sell it. And like things happened so fast, we actually didn't have time to pause for a bit and then try to build a sales team around like what we are doing. It was like moving so fast. We thought this was going to slow us down. Now this is our biggest priority. We are trying to scale up the sales machine, as people say. We are going to build a system where we can scale this up to many account executives and leaders and all that.
What was the hardest thing in transitioning from CTO, so to say, to also doing sales?
I like managing your time is I think the hardest part. Like I usually wake up very early because I have calls with European clients, and it's crazy how it works. Like I wouldn't say Europe is majority of our business, but a lot of our European customers want to get on a call because they need like data protection agreements, things like that requires more discussion and communication. So I have calls in the morning, and then like we have stand up at 9 a.m. and then like more calls with like our American customers, and then it's like, okay, it's 2 p.m. I go get lunch, and all of a sudden the rest of the team, who's a little bit distributed like on different parts of the US and Europe, like everyone is either almost done with work or they're like winding down, and that's when I'm like ready to actually spend some time with the rest of the team. So managing that was the hardest thing, like because it takes up so much of your time, and when you are free, your team has worked like a whole day, and now they're ready to take a break or eat dinner. So managing how to spend time with the team as well as doing sales was definitely the hardest.
When you hear what Gorkem just said here, what does that like? Does that look like somewhat of the path in portfolio companies of yours? Is it completely different?
It is completely different. Like, again, I've only heard companies grow as fast. I've never actually seen one grow as fast. And then the learnings that come with that blitz scaling, double blitz scaling, blitz 2 scaling is, I think, immense for me too. And speaking to Gorkem, just because we're close friends, he's been telling me about this on a weekly or bi-weekly basis, has been learning for me as well. And I was trying to pass this learning on to our other portfolio companies, most of which are also in AI.
I'm sitting here with a question that is maybe a bit weird and sidetracking, but I'm super curious because I imagine you have a very good eye to what is happening on the customer side, meaning what is the profile of the customers that you have, and what does that tell you about where this segment is moving?
One interesting learning or bet we took at the beginning of video models, like some video model, foundational model companies, they go out there and they say, oh, like we are gonna replace Hollywood, like we are gonna replace all of filmmaking. That's the biggest target they talk about. That makes for a good headline, and it gets attention, but film is a small market compared to all of other video content that's out there. Like 70% of the internet is video, and like almost none of that is film. So if we think all of this content is going to be AI generated, I don't care about replacing movies. It's very small compared to the rest of the price. And I think realizing this and working with companies who are actually generating content for the 70% of the internet and not wasting time with studios or whatever, I think was also a really good learning for us, because I believe that's the actual market we are going after. And, movies will eventually get there, but I'm interested in the bigger market that's in front of me.
That's why I asked the question, because I thought that was exactly what you saw. And yeah, very interesting. Okay, so now I want to go to something completely else and ask you a bit about building in San Francisco and building in Europe at the same time. How do you think about where to scale what? Why do you like the idea of having Turkish talent base? Is that just because of your Turkish roots, or is that because, well, there's actually a talent in Eastern Europe that you want to double down on?
I think every founder should be in San Francisco. Like, this is very hard. Building a company is incredibly hard. Getting funding is very hard, and you have to do whatever it takes for you to increase your chances. And if that means living in San Francisco, like, I think that's an easy sacrifice, if people call it sacrifice, to move here. I honestly like it. I've been living here for over 10 years. It's my home now. I really enjoy it, and then it happens to be the tech capital of the world. So I'm really happy about it. And then when it comes to building an engineering team in Turkey, yes, there is a lot of untapped potential in Eastern Europe. We try to, hire only exceptional talent in Turkey, and then try to build our team in San Francisco. But we were able to find a handful of exceptional people already. So we are still on the lookout.
I would just want to double click on SF, because when I'm talking about San Francisco to other founders, especially the founders in our portfolio who are moving or have moved to San Francisco, Fal's story is very inspirational. I feel like Fal became cool on many layers, which created this flywheel effect that affected the whole business. So the fact that Fal's engineering team was great and they had a strong vision meant that they were able to get a bunch of top-tier angel investors on board, which meant that you can get top-tier venture capital funds on board, both on seed and A and B, which meant that a lot of the model creators or people who are building consumer apps wanted to be affiliated with Fal. So they would actually publish their Fal pictures, Fal-generated images, videos, audio, whatever, on Twitter. And then that flywheel of having investors, influential people, model builders, and consumers who are going to consume these APIs, and then after you guys obviously launched that self-serve platform end of summer, created the ever-scaling flywheel of some sort. And that only happens if you're in SF. Wouldn't happen elsewhere.
This does marketing for us, right? Like, two things. First of all, we try to publish models whenever they're available. That's our number one marketing strategy. And our number two marketing strategy is actually our customers are doing our marketing for us, because anyone building with AI wants to scream that they're using AI. So it's very out there, and they sometimes tag Fal, built with Fal, just to it became a badge of honor or a cool thing to do, to build something with Fal. So that's the second way of how the marketing machine kind of works by itself.
Why, Enis, did you say that this would only happen if you were in San Francisco? Because I guess it's really a digital movement, right? With influencers and customers using Fal and tagging Fal and kind of that community I've always thought of as so borderless. I kind of always call it that, doesn't really matter where you are physically anymore. It matters where you are digitally. At least that's what explains who I am. If you see my search and
I think
history,
excluding SF is true. I mean, I think if you're not in SF, then who cares wherever you are? London versus Samarkand in Turkey, I think, is kind of similar. But then getting it's like unicorn founders per capita in San Francisco is what enabled Fal to get all these amazing co-founders as angels in pre-seed and seed, which also made them get into the right circles or tap the right circles to get first round and Andreessen on board. And that core is not decentralized. That's pretty much centralized. What comes after it, the model builders, people who are building AI on top of it, etc., is decentralized. But I think that core is offline and centralized.
I'll give one example. This actually happened during our fundraising. So we were putting out some interesting demos on the internet, and then like one of them went viral on Twitter, and Vercel's founder Guillermo actually DM'd me, "Hey, like, are you guys based in San Francisco? Like, would love to have coffee." And I was like, "Yes, I'm like down the street from you guys' office." And then he invited me that same day, and we had like an hour-long coffee. I explained what Faleye is, and at the time we were fundraising, or like we were about to fundraise. And then like next week, apparently they had their board meeting, and he actually recommended Fal to one of their investors. And then we happened to have like a pitch meeting with them the same week. So like, this chain of coincidences can only happen in San Francisco, and these little things increase your chances of success.
I got to dig into this, of course, because it's European VC podcast. I very much agree, Gorkem. I very much agree on the founder side, and maybe agree a little bit less on the investor side, in the sense that I always describe Europe as incredibly fragmented for a founder or for a new angel or a VC that's not super connected. But my contesting of what you're saying for the VC layer is that my view is that the best angels and the best VCs at the pre-seed seed level, you very quickly hear from each other who's moving, what's most exciting, and that recommendation from an angel that's highly reputed to a board member, to then that I see happening very efficiently just digitally here. Do you agree, Enis?
Yes and no. Yes, but then imagine 10xing that. Imagine there were 10x more VCs in London, and then imagine the flow of gossip or flow of information or the flow of FOMO that would create. I think there's an exponential, that level of FOMO increases exponentially with number of potential buyers or investors. And that's the case in San Francisco.
Yeah. Funny comment on it. Like, this is exactly why I am of the view that with E2VC, we got to publish as many episodes as possible. I just want to, because even if I published 5 a day, we would not be at anywhere close to the saturation level of covering who are building amazing things, who are investing in amazing things, who's doing what in Europe. We're never going to catch up to what's happening in the States in tech. So for that reason, I'm very much like, I just got to do my part and get as much out there as possible. Another question on this point, Enis, what does the Fal story kind of make you think about your own investment strategy and your bullishness on Europe and Eastern Europe? And obviously, to everyone, you do have a quite strong, what is that called, leaning towards diaspora founders. So you've already recognized it and have been doing so for many years. But yeah.
I think like 1/3 of our portfolio is founders already based in SF. Another 1/3 are founders who are moving to SF, and then another 1/3 of the founders don't have to move to SF because of the nature of their businesses. And majority of that are gaming companies where it's inherently global. You don't have to be anywhere, and financing value chain is pretty much global in gaming. From that perspective, it validates our strategy of SF and being SF first. We're trying to invest into blue ocean markets just because talent in Eastern Europe and Turkey is obviously good. It's easier to access. So access to talent is also not that bad. And it's easier to also retain that talent compared to the talent in the US. But then how that turns into your advantages, if you're investing into blue ocean markets that are going to happen, you don't know when they're going to happen. Might be happening in 1 year, it might be happening in 5 years. But as long as you can sustain in that market, and when that wave comes, you're going to be there to seize it. And Fal is a vivid example of that. So it pushes my decision-making into being even more blue ocean, more into investing into markets that don't exist right now, where you're taking a big market risk. You're not sure whether that market is ever going to increase or not, ever going to get to a certain size or not. But then again, if it does, and you can sustain in the market just because of the cheaper and good talent base in emerging Europe, you can seize that opportunity. Currently, our portfolio, I would say it's 50-50 in terms of that spectrum of red ocean versus blue ocean. It pushes me to make it also like 70-30 on that. blue-red spectrum.
Gorkem, you look like someone who is about to say something.
I mean, we talk about this with Enis. I think it's very interesting to invest in Eastern European founders on like very competitive but big markets too. I mean, that's the beauty of software, right? You can quickly build something that can compete with an incumbent, and if it's built in Eastern Europe, it's also like cheaper and more efficient. And the market's very big, and now like you have to go execute it. I mean, these opportunities, I think, especially is now more elevated with AI, and so many people are building like AI-enabled competitors to big incumbents. I think it's a very, very good opportunity for Eastern Europe to actually build these massive companies.
And like on AI, just to focus on that, I think that way with like GPT-2, Jasper, etc. Now with media, Fal's growth has now fizzled down to the dev tools category as well. A year ago, we were only talking about AI Copilot and how LLMs are going to be used for development. It was like flashy videos, but if you actually wanted the output, it wasn't there. It was cool people with cool videos raising good sums of capital with not actual results. But that changed. I think that adoption has now come with the likes of Lovable, Bolt, Cursor, our portfolio company, Pythagora, etc. And then Eastern Europe is very well positioned there because it's the intersection of AI and dev tools, which is kind of given the talent base that's here. People have been building dev tools product for a while, and now they're trying to reciprocate that onto AI. Is an opportunity space for us.
Enis, question for you: do you like competitive markets? Do you pass on deals because the market's too competitive?
Yes, I don't like competitive markets, but at the same time, I don't think your market is competitive. For me, the definition of a competitive market is much more saturated and stable, where there's a Gartner report on that market where there's an annual growth rate of whatever, 5 to 10% that you can foresee. I mean, being in it, you think obviously your market is also competitive. There are players, but if you can count the players, and if all of them are growing more than 2x year over year, then on my spectrum, it's not competitive, it's explosive.
I love competitive markets, but my definition is a little bit different. I think it's much better to be in a competitive market where the market's big enough, rather than just questioning if the market's big enough every day. And like, are you in the wrong race to begin with? I think is a much worse position than I need to like compete against these people.
Mm-hmm. But would you put Fal in that end where like it's a very, very competitive market? Because I think compared
it's
to the
competitive
growth
enough. Let's put it that way. It's competitive enough that like there's no question that the market's big enough.
Beautiful, guys. I want to close with one question, and that is the one or the two or three core lessons from Faleye from each of your perspectives, be that to founders or VCs or ecosystem developers. Have whoever in mind that you want. What are those lessons?
I mean, I have some like very specific lessons. One thing we learned like in the journey, I think if founders can make bigger VC firms split around either their seed or Series A, I think that's the best position for the founder to be in. That you give incentives for both firms to increase their ownership in the next rounds, and it's much more likely that they'll be more motivated to invest. So I feel like this is not talked about as much, but I believe this is like the best way to, if you are trying to optimize a round, try to make two big firms split the round in half, and that's going to be the best position for the founder.
And we could have spoken a ton about preemptive rounds, how to react to it as a founder, how to navigate it as an existing investor. We did not make it to cover that, but that's a big topic. Anything else, Gorkem, you want to add?
And I talked about it a little bit, but market positioning is really, really important. What you are not embarrassed to say about your company and you are willing to scream the loudest is usually like what people are going to understand what you do. And if you have, I have this hidden feature that we can also use, but we don't like talk about it in our landing page, like those things never work. You need to be extremely clear about what you do, and then people will listen and actually get your message. I always thought, okay, if you build something cool, people will come use it. No, like the messaging and, repeating time and time again what you do as clear as possible really helps people. Clarity on messaging matters a lot. And we saw this like very, very clearly on our side that this clarity of what we exactly do really helped us grow and position ourselves as a leader in the market.
Enis, your learnings?
Building on to what Gorkem said, I think messaging market fit is even more important than product market fit would be one, because that they nailed that. Second is, even if you have a couple million ARR, doesn't mean you've reached product market fit. You only realize you didn't have product market fit once you reach product market fit, which is what happened with Fal. I guess the third one is we tried leading Fal's A round. We failed. And obviously we're very good friends, which makes me question whether we can ever lead Series A rounds. And we have to ramp up our efforts if you want to get to a position where we are able to do that. It was a good wake-up call for us, I think, if we're going to increase the fund size and do A rounds.
My core learning is that I just once again got hammered home the point that if you are to be great in venture as an investor, you want to have been around forever. And you really want to have it be a completely beautiful line through everything you've done that you should be a VC. And I, of course, draw this lesson because Enis has known Gorkem forever, and here they are today, finally having catched at least a little bit of ownership in something that has caught lightning in a bottle. Guys, thank you so much for joining us for the podcast.
Thank you for having us.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with Ace Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.